Just first,
Morning.
your reaction to this print and what you think it essentially means for equities, because at least at this point, futures still remain trading to the upside here.
Yeah, I mean, it was a great number for sure. The economy is in a solid place. We're adding a lot of new wages that are going to continue to support spending. As Josh mentioned, we didn't get an acceleration in wages, so for stocks, it's a little bit of a Goldilocks type of number. The economy is still humming along, quite well. And in terms of an accelerating inflation picture, we didn't necessarily get that. So a little bit of something for everyone.
It certainly is. And Marvin, I guess I would wonder how you assess the different industries and sectors where we're continuing to see the most job growth kind of outpace or at least put the rest of this number on its back as well here, and your assessment of that.
Yeah, for sure. So it is the sectors that have driven a lot of the gains over the course of the last few months. So there's certainly sectors that it's been difficult to replenish after the pandemic. Healthcare continues to be a big part of it. Government, which is ultimately a function of what legislative taxes are passed, is something that has been driving things, not necessarily as, let's say, accretive to the economy as some of the more private sector driven things. But, it's a continuation of that. I think for those that are looking for excuses to say that the job number wasn't as great, there were weather related impacts, particularly around construction, particularly around maybe some of the entertainment sectors. But it was a good number. I don't think anybody's going to be able to poke too many holes through this.
Marvin, do you think it's enough, though, for the Fed to potentially push off that first rate cut?
You know what? At this point, every data point is real. I don't think they're there yet. We saw how split they were. It was 10 who thought we were going to get 3. It was 9 who thought we were going to only get 2. And I think everyone's going to be in a camp where they're going to be able to point to something that continues to make them believe that. Still a lot of data between now and June. Certainly, I think you and Josh were talking about July. Certainly a lot of data between now and July. I would point out that kind of the way you calculate inflation, it gets harder from a year-over-year perspective after May. We call that base effects. And if they're not able to cut in the summer, some of those inflation numbers, especially if they keep coming in this kind of like 0.3 of a month increase that we've seen, it's going to be really, really hard for them to reassess things until the end of the year.
I mean, I'm looking at the CME FedWatch tool right now. It's jumped by about 12, we'll say 11 percentage points right now between the current, us just having no cut, having a pause, and this is for the June meeting. So now, if we look further out, the pacing of any cuts that they put forward, when you hear Fed speak over the course of this week talking about, hey, maybe no cuts, maybe none and done, what does that signal to you?
I mean, so again, we were pretty split from the perspective of 3 to 2. Saying that there are no cuts really would, I think, change the belief that policy is restrictive. I haven't really heard that as a widespread view from the Fed. Most on the Fed still believe that a 5.5% funds rate is slowing the economy. And if they continue to believe that, then there is a reason for them to normalize. To say that there are no cuts this year would mean that, that 5.5% probably can't come down. And that's a much different type of conversation than what the Fed has put forward. So, Kashkari is a little bit of an outlier from that perspective. But, it's certainly something that we've been looking at for sure. Just how restrictive this policy is when you can add that many jobs every month.
Marvin, when you take a look at the losses that we've seen here since the start of this quarter, so really this week, we certainly have seen some worry creep back into the market, a lot of that pertaining to the Fed, a lot of that just on the heels also of the massive run-up that we saw in the first quarter and in 2023. Is some of the sell-off, though, the selling that we've seen over the last several trading days, do you think that's a bit overdone?
You know what? I do, but I can understand, taking some of those profits and in our world going without a big position into some of these bigger numbers kind of makes prudent sense, particularly if you've got gains. So there definitely is profit taking into it. And let's not forget the geopolitical aspects of things, which are fluid, and at least on a day-to-day basis, seem to be getting worse. So when you have that going into the weekend, when you have CPI next week, are you really taking big risk positions? And I think a lot of professional money managers are like, you know what, we've got some profits, let's book them, and kind of let's see how the weekend and CPI evolve.